Nothing I say on this channel should be taken as investment or trading advice. Please consult your SEBI registered investment advisor and research analyst. I also run a community on this channel. It has nothing to do with futures and options, BTST, options as a income generation, option selling, those kind of short-term gimmicks that you see on social media. So today we'll first begin with the chart of Nifty 500, how to read the screen. This is the weekly time frame chart. The blue line that you see is the 30 weekly moving average. This is the relative strength line. Here, this is the daily time frame chart with a 50 days simple moving average. So if I look at this particular chart, this is the chart of Nifty 500. And if you look at the relative strength here, I am comparing against Nifty, which tells you that Nifty 500, which is a broader market index, is actually outperforming Nifty 50 on the whole, which is something that we already know. The recent structure that you see of Nifty 500 is actually very encouraging. Despite of what you're hearing in terms of market not working, this is not a bull market, does not appear like that. Let me tell you, today, since I'm not pulling out the breadth data, I'll do that kind of update next week. The breadth data, despite of the last 6-7 days of correction that we have seen, breadth data is still positive, which tells you this is a market that is showing you signs that it wants to head higher. Now, in the short term, is this possible? It is possible. And then this is also possible. So you have to understand that this is a market where you will get rewarded if you buy and hold good structures. I'll cover that in a bit. So Nifty 500 structure is a firm higher high, higher low. It is currently consolidating because it is running into a long-term resistance here. Since I'm on this subject, I will also tell you that if I zoom out this chart, this is still for us a stage 3 kind of a market. This is not a pure stage 2 kind of a market. Probably it will become a stage 2 when we break out from here. The earnings has been really good. I don't expect a negative kind of the next 4 months for this year. I think the year is going to be good because the earnings are fine. The only caveat that I'll give you is what happens at the global front. Because of the kind of leadership we have, God knows what kind of things can play out. But apart from that, Indian market is actually looking good. Indian market is slow. Indian market is boring. Indian market is sluggish, but it is not weak. By no measure is Indian market today weak. It is just a bit in a non-momentum kind of a phase, and that is why you feel that nothing is happening. And quite frankly, it is not happening. If you're holding stocks, then yes, over 15, 20, 25, 30 days, you will see your PFL move up 3 to 4%. But if you're doing this in and out, chasing a breakout, those kind of things are not working because it is not a pure momentum driven kind of a bull market as of yet. Now, if you look at some sectors, the first sector I'll pull out is infrastructure. What do you see here? This appears to be a nothing kind of a trend. Price is just consolidating at 50 DMA. If you look at the weekly time frame chart, this is a beautiful contraction that is forming very tight price action right at 30 weekly moving average. This is a weekly time frame chart. Good relative strength. Such sectors should be on your radar. The next sector is metal. It's been one of the strongest sectors. It is the leader of the market currently. Nice bit of movement, a pullback to 50 DMA. Should have the guts to look at structures here. If you keep participating only in such phases where price is breaking out, you will always find yourself facing a retracement. When there is a leader pulling back to 50 DMA, look at it. The third is another leader that is setting up. Beautiful relative strength for PSU banks. It is now forming a contraction at 30 weekly moving average. Again, nothing that I say is from short term. So these things will take time to play out. It is for the one who is patient. But beautiful structure at 50 DMA, good amount of consolidation. Hardly 3-4 PSU banks are in a good structure, but the heavyweights are. So in general, overall banks also I'll put in this structure because yes, banks are currently facing a lot of flack, especially some private sector banks, and rightly so. It is good that people like Samir Arora are coming out and speaking on television that he's absolutely fed up with one of the giants of the industry who just does not move. And my take is also same. A word for the regulator. I wish the regulator were to alter the weightage of couple of banks in Bank Nifty, or probably bring in more banking stocks in it. It is the need of the hour to not rely on couple of stocks in bank nifty for the index to move, because this index is so critical for the stock market. I cannot tell you. Pre 2020, before these banks were the darlings of stock market and used to perform so well, the trends used to be beautiful in this index, and every time bank nifty used to move up, there used to be a different kind of sentiment impact that has completely been taken out because of underperformance of couple of banks. And that has to be looked at, because this is an index that can bring back the attention of FIIs also big time in our market. Let's say bank nifty moves up 13-14% in a quarter. All right, it is going to bring back the positive sentiment impact that currently our market is lacking. Our market is lacking momentum, and it is also lacking the positive sentiment, the feel good kind of a thing. Look at what is happening in the AI space abroad. Stocks and indexes corrected by 25-30%. There is a feel good factor there, and look at where price is today. That is missing from our market. So it can come from policy, or it can come from such adjustments by the regulator. It can come from something else, but it is the need of the hour that bank nifty needs to start moving again. You will see so much of difference in our market just because of this one index. I'll also include Realty here. Realty is pulling back beautifully to 50 DMA. Nice bit of movement recently. Relative strength had improved. It still needs some bit of, I would tell you, time consolidation, but this is not a bad structure at all. This is a beautiful structure in Realty. I would also look at capital market. Capital market, again, one of the leaders. Look at the beautiful relative strength. All that has happened in the past few months is consolidation. It is trying to form a base at 50 DMA. This is a beautiful structure. And the last index that I would focus upon is defense. Defense has just started moving up. I've repeated many times about this sector, again at 50 DMA, and I shot up a lot of stocks in this sector have already started moving up. But this is again a pocket that is not going to keep quiet for a long period of time, because it is a global theme. Look at the relative strength bias here, just fantastic. There are also some sectors that are already in motion. That is, pharma is there, hospital sector is there, healthcare sector is there. Those sectors need some cool off. You look at the two-wheeler auto space. So many times I've discussed about this. You can just go back and watch my June, July, even May videos about auto sector. Two-wheeler space. Look at what has happened here. And one specific theme that I had alerted about is Nifty EV. So I haven't played the auto sector this time. I've only played the EV sector. A couple of names from this sector have done fantastically well in terms of trend structure. Look at the movement that has happened. But these pockets now need a cool off. When it comes to broader market, look at the small cap 250 index. Look at the beautiful structure here, both at the weekly time frame and the daily time frame. You also take a look at the mid-cap, micro-cap pockets. These are doing exceptionally well. Look at it. Beautiful structure. This is a proper stage 2 structure. Look at the relative strength. Yes, it can consolidate, but don't for once think that India is not in a strength kind of a position. India is exceptionally strong, but it is exceptionally weak when it comes to sentiment and momentum. In recent times, ever since the CAS closing system has come in, these candles that you see in Bank Nifty, these cannot be trusted. So what I'm doing instead is looking at the futures candles. Those are much more reliable. I also hope, and the SEBI chairman came out with statements a couple of days back that they're actively monitoring. I just hope they can fix this soon, because the charts are getting altered on daily time frame. That is why if you see today, I've opened the weekly time frame chart also, because a weekly closing is much more reliable in these times when we are having a new system that is being introduced in our market. So I just hope this gets fixed, because this is extremely important for our market in terms of reliability of data. In the last couple of days, you're seeing the Sensex options went from what I think 10 or 20 to something like 280 or 250. This should not happen. It should not happen because, again, it impacts the sentiment. It also gives a perception that things are not working fine. Remember, stock market is all about perception. You get the perception element right, and you can do so many things. And this is something that we should learn from markets abroad as well, because every time something is happening in the US market or something happens, you see the regulator, you see the president himself coming out and saying this is a fantastic time to buy stocks. People should be buying stocks. Businesses should be investing in the US. This is something we lack. We need a more aggressive play from the government. We need more policies that are pro stock market, pro FII, FDI. That kind of policies is the need of the hour. There was an article I was reading in one of the prominent magazines or newspaper, whatever you may call it, that there is something happening. Finance ministry is looking into it. I just hope that news is true, because you got to think like a businessman. A businessman would never say no to a capital. He may put some conditions, but he'll never say no, because capital is so important. The same goes for the point I was making earlier for Nifty Bank. Do something in Nifty Bank. That index alone, for those of you who are participating in the market in the pre-COVID era, Bank Nifty used to set the tone for the entire market. That is how beautiful this index is, because once it starts moving, it gives you a feel good factor, which is so important for overall market. Again, look at the small cap space. These pockets will perform. Every retracement in these pockets will be an opportunity, just because currently it's way too above 50 DMA. So last time around, when price was what about 6-7% above 50 DMA, you saw a retracement. Maybe we are heading into that similar phase. It is right now 4.4% away. You don't know, these kind of pullbacks can play out, but there's no denying that these are the pockets that are so strong currently in the market, comfortably outpacing the large cap. It is not that all large caps are struggling. So first, I'll open up the chart of Nifty. If you look at the chart of Nifty, nothing much is happening. It is so far away, no momentum. But if you look at another large cap index, something like a Nifty Junior, do I have a Nifty Junior here, which is the Nifty Next 50? Look at this index. So people who are interested in large cap, look at the relative strength against Nifty. There is something happening in this index. The reason being, again, is the weight. Is the weight of 5-6 stocks in the Nifty, the old economy stocks, that are just not doing anything. These things have to be addressed. It has to be addressed because Sensex and Nifty are a global benchmark that is tracked by so many investors, so many FIIs, so many wealthy people. If index on year basis is down 3%, but small cap is up 30-40%, it doesn't help our cause. Either we need a massive rejig in the index, or we need a rebalancing where new economy stocks can also get proper weight, so that a proper advertisement about India can happen. We are going to celebrate our 80th Independence Day tomorrow. The video will be out tomorrow, that is Saturday 15th itself. We need to behave like a country who is willing to do anything to attract capital, which is willing to advertise itself to the world, the positive side of it. Whereas what we see is all the negative sides of India, and of course there are negative sides, are always advertised by most of the mediums. Whereas there is no proactiveness when it comes to advertising what a vibrant stock market we have. And we do have a vibrant stock market. It is all about how things are advertised. Look at one of our neighbors. They are one of the superpowers of the country. Look at how they advertise, whether it is their investment environment, their people side of things, anything, their technology part of things. It is all about positive advertisement, and they do block all the negative stuff also. Why do they do that? Because perception is everything in life. If you have a positive perception about something, things will automatically start working. If you have a negative perception about something, do what you want, things won't work. So it is high time that people who take care of these things hopefully are taking note of it. As a country, we need to advertise ourselves. As a stock market, we need to advertise ourselves. And Nifty 50 and Sensex are the biggest advertisement for our stock market. And if they do well, our people will do well. Our people do well, they will put more money in the economy. Economy will grow further, and things will start rolling again. That is why stock market is a great enabler for an economy. You have to set it free. You have to have policies where people feel that, yes, this is a place where I can make a return. Not people feeling the other way around, that let me go abroad and make money. Are you understanding? So we need more progressive kind of things, as opposed to what the state that we are in today. So for people who like to trade or invest in large cap sector, Nifty Junior is fantastic. Look at the relative strength. This is great. Avoid sectors that have such relative strength. I'll also pull out some examples for you. Again, IPO space, always keep a tab on it. This is a 2-3 year kind of 18-month kind of a breakout. Beautiful relative strength. Always look at new companies and look at why this index is doing well, because these are new age businesses that are coming up. These are businesses that are in sync with what is happening globally. as opposed to some heavyweight companies in Nifty that are just not doing well. I hope you get my point. So when it comes to avoiding certain structures in the market, whether it is stocks or index, always avoid such structures where relative strength is clearly sloping down. You look at the IT and digital space also today. Yes, we have had some fantastic rally in recent times, but it is within a lower high and lower low structure. Look at the relative strength. There's no proper structure here, as opposed to what IT was doing when it was one of the leaders post COVID. I'll just show you what positive relative strength structure looks like. It is this. It is clean RS heading higher, and that is when IT did well. So you got to understand where the relative strengths are beautiful these days. I'll also show you one more sector which is quietly doing very well, which is the India manufacturing sector. Look at it, beautiful contraction breakout. When it tests out, look at this particular structure. Look at the beautiful RS here. The point being that there are plenty of opportunities that are there in this market. It is not a dead market. It is a market where if you pay attention towards where to look at, you can make returns over a period of time. Yes, it is not a crazy momentum driven market that we all are getting envious about when we are looking at South Korea or we are looking at the Nasdaq or S&P 500. Things are shooting up every day, 40 50% returns in 6 months. Yes, we are missing out on that. And I just hope that again some things change at the policy front, something happens, because if you saw the quarterly data was really good. It was surprising. And I hope that is advertised at least, because our quarterly numbers, especially in the SMID space, can match a lot of companies that are there in S&P 500 also. Plus, our overall inflation is under control. Macro data is good. This needs to be advertised. I don't know whether that will happen or not. Every market goes through cycles. Every market goes through tough phases. It is just that we have to live those tough phases day in and day out, and at times it becomes very difficult, it becomes boring, it becomes frustrating, especially in the era of social media. You know how things work. All right, so the broader market data I'll put up next week. That is as equally important as these charts are. Please do not forget that, because broader market data always gives you conviction, it gives you confidence, it gives you a deep understanding about what is happening in our market. All right, so have a great weekend ahead, guys. Take care and be safe.